Good morning, everyone, and welcome to the Trade Talk podcast. On Tuesday, we saw further more weakness in the market. It opened at an unchanged levels, but from there all the way it fell to the levels of 22,200 during the day. It has broken the level of 22,300. Although it closed above the levels of 22,300, we are of the view that the recovery was not as per or up to expectations. So while looking at the setup of the market, we are of the view that on immediate basis 22,370 or 22,450, which is the resistance level of 20 days simple moving average, is going to act as major resistance for the market. On the downside, 22,230 and 200 going to act as support. Below 22,230, which was the lowest level of the previous day, and also the support of, we can say, 50 days simple moving average. Below that we can expect further more weakness and the market can fall to the next levels of 22,000, where it has support of 100 days simple moving average. So either 22,000 or 22,100 we are expecting market to find meaningful support. Otherwise we are going to see range bound or consolidation sort of activity in the market. The ideal strategy should be to look for reducing long positions around or between 22,370 and 400 levels. Contra buying is advisable between 22,100 and 22,000 with a stop loss at 21,900. For the Bank Nifty, there also we saw weakness, but the Bank Nifty was more weaker as compared to Nifty. Number of stocks closed at the lowest point of the day. It has broken the level of 48,300 on a closing basis, which is negative. Now the next level to watch out for would be 48,000 and 47,800. So up to those levels we can expect weakness if it breaks the level of 48,200 or if it sustains below the levels of 48,300. However, contra buying is advisable close to 47,900 or 47,800 levels. For the Nifty IT index, we saw some recovery and it managed to close above the previous high. Number of IT companies did well on Tuesday, and it was mainly because of global macros which are turning little bit positive for emerging markets. We also saw some recovery in FMCG companies like ITC, Dabur, Marico, Hindustan Lever. There we are expecting further more momentum as most of these stocks have crossed their crucial resistance levels. So FMCG stocks should be on the watch list, and for metals and mining stocks, we need to see that whether they are reversing, they are forming any reversal formation after hitting important supports or not. So broadly, markets to remain within the range of 22,370, 400 on the higher side, and 22,100, 22,000 on the downside. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening us and have a great day to all of you.